funds and the prop firms, they got blown out the first time up over through 1100, 1200. And that caused that kind of panic move. But this move today, now remember, we opened down in there. Mm-hmm. And then we quickly rallied up. And this morning we were up like 10 or 15 bucks. And I'm watching it up 10 or 15 bucks. And I'm thinking to myself, I don't need to jump in front of this train. I already got enough short deltas. I don't need this. I don't need this headache. I don't need this on my conscience today.
I don't need the aggravation.
I don't need the aggravation. But then I just watched it go up $100 more. And now it's up actually 130.
Yeah.
And as I sit here and I watch it, I'm like this is pretty much a buy it at, like, just buy it. Like, this is not a wait for it to pull back. This is not new money. Like, this is not a bunch of kids trading on some.
Oh, come on. How many shares are they buying in a $400 account? I mean, they pulling their money together and
$4,000 account, even.
Whatever. Sure.
3 shares.
Right.
5 shares if you're fully margined, or 6 shares.
Right.
No chance. That is not what's going on here. This is not, this is not a Robin Hood inspired. This is nothing like that.
Can't blame this on the young millennials.
No, not at all. Not on a 1400. You can't, when I look at my screen, the first stock on my screen after all the futures that I watch is Apple, and Apple's up 40 cents today. It's pretty much a non-factor day. Then I have Tesla, Amazon, and Google. And Tesla is a $1,530 stock. It's up 135 right now. Amazon's up 22. It's a $3,000 stock, and Google's up $28. It's a $1,500 stock. There is no $1,500 account or $3,000 account buying Tesla, Amazon, and Google. Flat out, doesn't happen. It's not happening. People are not buying one share. We have a platform called Doe, where it's a free app and people can trade stocks on it, and there's thousands and thousands of trades a day on Doe, and nobody's buying one share of Amazon. Okay, it's just not happening. So when I look at this, okay, I'm trying to figure out, man, okay, now it's up 140. This is almost like some firm or firms has an order in their hands, which is just covering for somebody. It's the only thing I can think it is.
It feels like it.
Think?
It feels like it.
It feels like they're just saying, hey, show me an offer and I'll take it.
Right.
I mean, because they must have, like, I don't know, 100, 200,000. Well, how many shares of Tesla have traded today?
19 million. I think I just looked at it. 19.5 million.
19.5 million. So it's not 100 or 200,000. It's a million shares.
Yeah.
Got a million shares to buy. And do you remember
average volume, which is important when you're looking at this. So let's take a look at that for a quick second.
Okay.
The average volume on Tesla is about 14 million. So it's more.
14 million is 1,000 shares.
14 million is 1,000.
Oh, what are you talking about? The average notional size per trade?
No. The average daily volume. I'm so sorry.
Average daily volume. Sorry. So
it's got 5 million more with a half an hour to go.
Okay. Yeah. Don't worry about that. That's not relevant. So when you have to go back in your head right now, and you have to think of the day in the end of the pandemic, when there was a firm in Chicago that blew out, making markets in the VIX. Now there's a lot more prop firms. There's a lot more trading firms making markets and trading Tesla than there are the VIX.
Right.
Most hedge funds don't trade volatility products like the VIX. Most prop firms don't make markets in products like the VIX. And if you're wondering why, it's because the fees are really expensive for prop firms, and because it's a single exchange product, and you have to really have traders in the pit. It's one of the few pits left with traders, and you can't really get any edge unless you have traders in the pit. So when you remember what happened in the VIX when it went to 85, do you remember that?
Yeah,
there were no offers. I mean, they had to buy everything in sight because they had to basically get flat, or they were being closed out by the CME, by the SIBO, by the clearing firms, whatever it was, they're getting closed out.
There's no better example of that to the other side with oil, which we just
No better example. Well, the only problem with oil is
they were selling it under zero. I mean, like, you know,
no, but that was a market structure issue. That was not.
I get it, but like when you have to do something, price is irrelevant. Is my point.
But that was market structure. So I'm going to write off the below zero. But you can say that oil, got down to the point where it was $10, $11, whatever it was. But that was different because longs are different than shorts. And in this case here, to me, this looks like the exact opposite of that event. Now, we didn't do anything in there today.
Right.
Absolutely zero position on, we have existing position, but zero opening trades in there, just some adjustments. So I'm not talking my book.
Mm-hmm.
That's just what it looks like to me in Tesla. And other stocks looked a little bit like this. I mean, to a certain extent, I guess you can say, Netflix out of the chute, but it's been pretty much here all day, up around 40, and it's been a little bit more normal. I wouldn't call that short covering for some reason. Right. I would just call that just buying. But when I look at Tesla, I think that's something completely different. I do. You can't get a $1,500 stock. You can't with 19 million shares trading and think that's normal activity. Just not the case.
Doesn't seem like it. Now, if there was 5,000 shares that traded, you say, oh, you know what? It's fine. It's a thinly traded stock. And
yep. If it was Volkswagen going up on 100,000 shares, or if it was